As I mentioned yesterday, um, market price is going to test the high, the previous high. It's most likely today or early next week. Market open as a small trading range. It can go down to retest the moving average and go back up, or stay in a trading range for a whole day. It's middle of the trading range. So currently it's indecision. Yesterday is a large bear bar, but today open at this middle. I think this is a bull trap, and it will go back up. A bear trap, it will go back up to test the high, and maybe close the gap. 1 minute chart, this is a wedge, a triangle. See if this triangle can break out upside or downside. A breakout bar to test the trend line. The market wants to push the price back up to the high. A strong bull bar, but a large wick. So wait for next bar to see if it's a follow through bar. I will call this a pin bar, and I think it's a good entry for a little bit more, or even measure the move for this bar. It's heading to the high of yesterday, also the high of the 60 minutes chart. I'm wondering if it can go up to close the gap today. It's a strong hourly bar, only 80 minutes left. It can go up to test the round number and even go higher to test close the gap. The all-time high is just a few points away after close the gap. A large reverse bar, it's okay to exit here, reduce the size, or I think it will come back to the high, but it may be go downside to close the gap, then go back up again. This bar is too large. It reduces the probability to go up again. The price hasn't touched the low of this bear bar and then went back eagerly. So I think this is a bear trap. It will go higher to touch the high and see if the price can break out the high and go even higher. If measure leg 1, leg 2, it's a bit higher than yesterday's high. This is a bear trap entry. A large bull bar after a bear bar. Also, it's an inside bar. This high and yesterday's high only 2.75 points and a large breakout bar to test the hourly and 5 minutes moving average is a trap. It's a big trap. So I think it will bounce back and do sideways trending for a while. It may go down a bit to close the gap, but the two moving averages here, at least some sideways trading. if entered here and can add a size here to make break even. This big bear bar is close to the middle of the trading range, so better not enter, buy or sell in around this area. Wait for the price to go to bottom or go to the top. It's at the wedge bottom and also micro wedge. 1, 2, 3. I think it will go back to the 50%. This is at the bottom of the trading range. It may go down, break out the whole wedge and close the gap, but this trading range is big. It's uneasy, not easy to break out and make a major move. It's also still always in long in the 60 minutes chart. So it's likely to go back to the 50%, also the middle of the trading range. Open price. If you have entered long here, it's better not to exit early because this is a trading range. It's most likely to return to the middle part of the trading range rather than go down. It's not a bear trend, it's a bear leg in the trading range. So better not enter sell here. The breakout or most of breakout will fail. So it may go back down to test the gap, to close the gap, but it's not a bear trend. It hardly can go down and turns into a big bear trend. Market is pushing price back to the trend line. It's better to exit at the trend line. It may go back down to test the bottom line again. At least reduce some size here, and it could go up to touch the yesterday's high.